Hello students, how are you? I hope you are well. And today we are doing the third chapter of Accountancy Admission of a New Partner. In last two videos you studied that when a new partner is admitted, how can we calculate the new profit sharing ratio, and second we do the calculation of sacrificing ratio. And today in this video we are studying the topic number 3, accounting treatment of goodwill. When a new partner is admitted, then what accounting treatment of goodwill is done. So goodwill, at the time of admission of a new partner, goodwill are given, are in the question is two types. First, goodwill, when goodwill already appears or given in the books of firm. At the time of admission, old balance sheet of the firm is given, and in the balance sheet of asset side, goodwill is written, goodwill is given. That is called goodwill already appear, and in the question it is given that already appear, existed, or shown in balance sheet. Whenever these words and any one of the word is given in the question, that means it is the old goodwill. And here goodwill is given 50,000 and A and B are partners. They share the profit equally, and C is admitted for 1/4 share. And when C is admitted, then this goodwill which is given in the balance sheet, we divide it among the old partners in their old ratio. So we write the journal entry. First of all, we write of this goodwill, and this goodwill is debited the partner capital or current account. So we write A capital or current account. Capital account is used when capital is fluctuating in the question, and when capital is fixed when we debited the partner current account. And credited is to goodwill, and we divide the 50,000 equally. That means two partners, each partner 25,000 and 25,000. So, and write the narration, goodwill already appears and now write off. Before admission of a new partner, first of all we write off the old goodwill which is given in the balance sheet. And after that, new partner is admitted and goodwill valued at the time of admission of a new partner. When a new partner is admitted, then goodwill is valued by different method which was given in the last videos. Then, and first of all, when amount of goodwill or premium of goodwill, new partner paid the old partner privately. First case is new partner bring his share of goodwill and paid to the old partners privately. Second method is when new partner bring his share of goodwill or premium for goodwill in cash. And third method is when new partner does not bring his share of goodwill or premium for goodwill in cash. There are the three situations at the time of admission of a new partner to treatment of goodwill. When new partner is admitted and goodwill is valued at the time of admission of a new partner, there are three methods. First is when amount of goodwill, premium for goodwill paid by the new partner privately to old partner. And second is when new partner bring his share of goodwill or premium of goodwill in cash. When the new partner paid his share of goodwill to the sacrificing partner privately, then there is no record in the books of firm. So, second case, when new partner bring a share of goodwill or premium of goodwill in cash, there are two situations when amount brought by new partner in cash and that amount is retained in the business. That amount is used in the business. And second is amount brought in cash and withdrawn by the old partners. New partner bring his share of goodwill and it is withdrawn by the sacrificing partner. So first method, when amount is retained in the business, we do journal and two journal entries in the books of account. First entry for bring the share of goodwill. For example, C is admitted and he bring rupees 40,000 as a premium of goodwill and rupees 1 lakh for capital. That means new partner bring 40,000 his share of goodwill and 1 lakh for his share of capital. And by this amount of increase of the firm, then journal entry is cash account या bank account debit to premium for goodwill account and to C capital account. Total cash brought by C is 1,40,000. 40,000 is premium for goodwill and 1 lakh is for his share of capital. So, capital and share of goodwill brought by new partner. And after that, this premium of goodwill is divided in the sacrificing ratio to sacrificing partner. So first of all, we calculate the sacrificing or gaining ratio, and new partner is gained and old partner is sacrificed. So we give the journal entry premium for goodwill account debit 40,000 to old partners capital account, and it is given in sacrificing ratio. This amount of goodwill divided among the partners in their sacrificing ratio. Only two journal entries are made when the amount is brought in cash and retained in the business. Now come on the second topic, amount brought by new partner and withdrawn by the partner. So first journal entry is same, cash account debit, bank account debit to premium for goodwill account. Second entry is same, and third entry we do for the withdrawing of amount. That journal entry is old partners capital account debit to bank account. Because all partners withdraw their amount of goodwill, that old partner's capital account debit to cash or bank account. If they withdraw full amount, then we do the entry with the full amount, and when the old partner, when the sacrificing partner withdraw only 50% amount, that we do this entry with the 50%, and when they withdraw 1/4 part, then we write the amount of 1/4 amount. So we study this topic with the help of an example. Example number 29 of the D.K. Goyal book. In this question, A, B, C and are partners sharing profits and losses in the ratio of 4:3:2. D is admitted for 2/9 share of profits and bring rupees 3 lakh as his capital and his share of goodwill in cash. Goodwill of the firm is valued at the 150% of the average profits of last 3 years, which were as follows. Year ended 31st March 2018, 45,000 after charging loss by fire 60,000. Year ended 31st March 2019, profit is rupees 2,40,000 and year ended 31st March 2020, rupees 3 lakh. On 1st January 2020, a motorbike costing rupees 80,000 was purchased and was wrongly debited to the travelling expenses. Depreciation on motorbike was to be charged at the rate of 25% per annum. Journalize the above arrangement in the books of accounts. So, in this question, first of all, we calculate the goodwill. Calculation of goodwill. In this question, there are some adjustments in the profits. So, we may solve the adjustment. (2018) profit, 2019 and 2020. First of all, profits 2018 45,000, 19 2,40,000 and 20 3 lakh rupees. And 2018 year profit is given after charging loss of fire. So it is abnormal loss and we add in the 2018 profit. Loss by fire. Rupees 60,000. And second adjustment is given in 1st January 2020. A motorbike costing rupees 80,000 was purchased and wrongly debited to the travelling expenses. So, same in January 2020, a bike is purchased and that is debited to the travelling expenses. That means capital expenditure is treated as revenue expenditure. And by this profit is decreased. So, we solve this adjustment. Capital expenditure treated as revenue expenditure. That is 80,000 added in profit of 2020, and there is a depreciation. Depreciation is the loss, so we subtract it. Depreciation on bike at the rate of 25%. Value is 80,000, multiply 25 by may 100 into 3 by may 12. because bike is purchased on only 1st January. There are only 3 months are left. So rupees 5,000 is the credited in 2020 profit because it is loss. Now we calculate the profit, adjusted profit. Here 1,05,000. There is no change in the profit of 2019, and 2020 profit is 3,80,000 minus 5,000, 3,75,000. Now we calculate the value of goodwill at 150%. Then calculate average profit. Is equal to 1,05,000 plus में 2,40,000 plus 3,75,000 divided by 3. Then total become 7,20,000 divided by 3. 3 2 just 6 and 3 4 just 12. Average profit is 2,40,000 and firm goodwill is valued at 150%. 2,50,000 and 40,000 multiply 150 divided by 100. Then its value is, goodwill value is 3,60,000. And now D bring his share of goodwill is equal to 3,60,000 and E enter in this firm for 2/9 share. 9 for the 36. That means D bring his share of goodwill 80,000. And after that, in second working note, we find out the sacrificing ratio. Old ratio is ABC is equal to 4:3:2. And in this question, only new partner share is given, that is 2/9. So let profit is equal to 1. D share 2/9, remaining share old ratio of ABC is given 4:3:2 and new ratio of A, B, C and D is 3:2:2. 3:2:2. And in this question, old and new ratio both are given. So we calculate the sacrificing ratio by subtracting. So A sacrifice is equal to old ratio 4/9 and new ratio is 3/9 is equal to 1/9 sacrifice, and B 3/9 minus 2/9 is equal to 1/9, and C 2/9 minus 2/9 is equal to 0. That D partner nor gain, neither sacrifice, and D gain because D is new partner and D is gain. And D bring his share of goodwill 80,000 rupees, and this 80,000 rupees paid by C in 1/9 and 1/9, that means sacrificing ratio. And at the time of admission of a new partner, we do the journal entry. In this question, date is not mentioned, so we don't write the date in the date column. First of all, D, bring his share of goodwill 80,000 and his share of capital rupees 3 lakh rupees. So total amount brought by D is 3,80,000. Bank account debit 3,80,000 to D, capital account 3 lakh to premium for goodwill account is equal to 80,000. Narration is given. Capital and share of goodwill brought by D. Now, this amount of goodwill, this premium for goodwill account is debited by distributing this part to the sacrificing partner. Because we studied in the topic that whenever reconstitution of the firm, every gaining partner pay to the compensate to the sacrifice partner. Now D is gaining partner and A and B is sacrifice partner. So D paid 80,000, compensate A and B in the 1:1. That means sacrificing ratio is equal of A and B. This 80,000 is divided in A and B equally. Premium for goodwill account debit 80,000 to A capital account. In this question, there is no mention capital is fixed or fluctuating, so we treat it as fluctuating capital. Debit credited A capital account 40,000 to B capital account 40,000. Amount of goodwill transferred to sacrifice partner in sacrificing ratio. And in this question, it is not mentioned that amount is withdrawn by partner or not. So we treat it as this amount is retained in the business. I hope you understand this question.